Hudaco was founded in 1891 and was first listed on the JSE in 1938. It imports and distributes branded engineering consumables as well as power tools, security, automotive and radio communication products. Recently it acquired Keymark, which makes PVC hoses for the mining industry. Market cap 3.6 billion rand, price to earnings ratio 8.6, dividend yield of 5%. Well, that dividend yield's got to be attractive to dividend seeking investors out there, Paul.
Yeah, also in the same kind of space, Hudaco, the full name used to be Hubert Davies Company, and it was founded literally at the beginning of the mining industry's evolution in this country in downtown Johannesburg. Listed on the exchange, it's done well, it's had good years, it's had bad years. Currently though, what's interesting is that the management team under Stephen Connolly doing a great job, and suddenly, boom, out of the left field came this issue of their BEE structure and whether or not it was legit, and whether or not they had a substantial SARS potential liability. I see the share price is starting to move up since that debacle, so I don't know whether this means that there's been some progress on this, but for the moment it's a little bit under the clouds because of that issue.
How under the clouds are we actually, Daniel?
Well, I'd say that when the news of this first broke, the share reacted very strongly on the downside. It moved from, I think, the 110, 115 levels all the way, I think the bottom was about 84, 85. Since then, it has started increasing, now about 105. I think the main reasons are that the stock overreacted initially. I think guys thought to themselves that having priced in the downside from this possible liability, there was still value in the share at the low 90s, and therefore they started purchasing it up to the current level. That obviously takes into account that the liability that they might have to SARS isn't as big as SARS is indicating. They're indicating a liability of a couple of billion. Hudaco has denied that this number is valid. They say that there are certain things in the calculation that aren't being done correctly. I think what the market's pricing in is a liability quite a bit less than that, and that's why the share price has reacted.
Paul, anything else you'd like to say on Hudaco before we go to Hot or Not?
Well, I think that sort of summarizes it. Remember, sometimes people look at the size of potential fines businesses face and say, well, look, that's absolutely disastrous. Remember, though, that the valuation of a business is a function of the long-term cash flows and earnings you anticipate earning from it. So even quite a heavy short-term bang in the face from something like this, and you see the same thing with fines in the construction sector, isn't necessarily all that negative in the medium term. Having said that, I think Daniel's probably right. There's probably a counterposing opinion from legal counsel and experts saying that this was the correct way that they dealt with it. So I suppose that probably at the end of the day, some sort of agreement or settlement or resolution of the problem will come to the fore. And in the meantime, the business is cautiously run, conservatively operated, nice lines of business, and enjoying the same kind of resumption of activity that Invicta had that we spoke about earlier.
And as you said, Daniel, the recovery in the share price has already taken place in anticipation that this is not really going to be an issue.
Right, well, not that it won't be an issue, but that it will be less of an issue than originally suspected. I think that there might be some more upside to the share price depending on results. The read-through from Invicta is possibly good. The reason why I say possibly is because Invicta's Bearingman Group grew nicely, but that's possibly from taking market share from Hudaco instead of the sector as a whole growing. So that'll be something to watch.
Hot or not, Paul, on Hudaco?
I'm going to go with not hot. You know, I'm just slightly cautious by nature, and I'd prefer not to jump in with a hot.
You are slightly cautious by nature. My goodness me, that's a big statement from Mr.
What, has that not been your experience today?
No, you buy at heady levels, you're gung-ho in terms of putting the
well,
trigger.
that's slightly different. I like when the coast appears clear, but this one I would say the coast is not entirely clear, and there could still be some negative surprises there, and I'd prefer to err on the side of caution this time, so not hot.
Daniel, hot or not?
I'd say that while Paul is right that you do need some caution, you can see from the valuation difference between Hudaco and Invicta that there is quite a bit priced in still. Something to also take into account is that Hudaco has made some good acquisitions in the filter business. So guys think that they're still overly exposed to machinery parts in platinum mining, etc., and they price that into the stock, and it's a disaster if you look at it from that point of view. But the filter business has done extremely well because with these modern day pieces of machinery, they have high-tech engines, and what that actually means is that the filters need to be replaced more often. So that's actually a great area of equipment parts to currently be in. So I would say that the downside is priced in, and I'd say it's still hot.